Welcome to the Top M&A Entrepreneurs. This episode is brought to you by Duedilio, Duedilio. It's a M&A due diligence marketplace for service providers. It's for online, offline businesses. It's free to use, search, find, due diligence service provider. You only pay when you engage with the right person. It is a modern way to evaluate businesses, especially to establish assets, liabilities, and evaluate the commercial potential. No deal better than a bad deal. Today, my guest is Sebastian Amieva. He's an investor, mentor, M&A expert, global citizen. I mean, he travels the world. If you follow his Facebook, he's in a new spot every day. And a Harvard Law grad. Sebastian has spent 12 years personally implementing M&A strategies, investing into startups, and traveling around the world. Welcome to the show, Sebastian.
Thank you very much, John. Yeah, I'm very excited about this interview. Thank you very much for inviting me. And yes, let's have fun. Let's talk about the M&A, which I guess is the topic that everybody is enjoying.
Yeah. I love it. So where are you answering or doing the interview from today? Because that looks like, I don't know, a hotel room or something?
Correct, yeah. So right now I'm in Montevideo, Uruguay. It's a little country beside Argentina, Uruguay. So I'm in Montevideo, which is the capital. It's a small country, 4 million people. So I came here. I'm coming every year. I came here for spend some holidays. They have a nice beach here. So it's called Punta del Este. So I recommend to anybody to spend some time in South America and Uruguay. It's one of the safest countries in Latin America. So and a small one.
Beautiful.
So, yeah.
So do you do any deals in Uruguay or Latin America? And I'm probably sure you do. But the reason I ask this is I got a guy reached out to me on LinkedIn. He's got a nice little, I don't know, almost a $2 million business, very profitable, and he wants to sell.
Yes, in terms of buying deals in Latin America, which I exploring more and more every year, I'm getting a lot of requests from business sellers that they want to exit. The only issue here is the funding, right? So right. The banks won't give you anything to do a LBO transaction, right? A leverage buyout. So I discovered that you can do the holding subsidiary strategy, which I did in Brazil, right? I bought the biggest LED factory in Brazil, in Sao Paulo. It was 700 plus employees, 22 million euros in assets. What we did in that case with Latin American market is setting up the holding company in a first world economy. It can be in Canada, US, UK, or Australia, right? So setting up the holding company in a first world economy like UK, like I did, it allowed me to access to funding solution, right? To a lot of lending facilities. So we set up the holding company there. Then the Brazilian company became a subsidiary one. And then we were able to raise funds from the UK and bring down to the Brazil for restructure the company. So that way I was able to buy this 700 plus employees company, right? The biggest LED factory in Brazil. So, and then I start to explore more, and it's plenty of deals in Mexico, Brazil, big economies, right, in the world, right? Mexico, 200 million people, Brazil, the same, 200 million people, big economy. So I think it's plenty of deals, but the sellers, they don't know how to exit, right? Because sometimes it's difficult for Latin Americans to have 20 million, 30 million to purchase a business. So you can structure this holding strategy, strategy. So holding subsidiary. So I recommend to people to get into Latin American markets to try, because you expand. You can become a global deal maker, not just doing deals in the US, doing the SBA, which most of our
Richard
audience
does deals globally too. So it's not just like, hey, United States and UK. So yeah,
I love Richard Branson. He's also very global, right? So
yeah,
I realized if you're a global deal maker, you have more opportunities, right? You are open to different opportunities, but the best way to do it is setting up the holding in a first world economy where you have
how long does that take and how much does that cost? Because I did get to that point where I found somebody that was a citizen of Peru, now lives in Miami, and said, well, there's the process is it could take 6 months to a year because you got to move all your there and then to move the assets under the holding company.
Yeah, correct. So in terms of the time frame and how long it takes, it normally takes 3-4 months, 5 months maximum. It depends the law firm that you have, the tax planner, right? The CPA that you're working with, right? Sometimes it's not your fault. You can do everything fast, and then the lawyer is slow response. The CPA also is very slow. So normally you need to transfer all the shares from the subsidiary the Latin American company, say, to the holding company in UK. So it takes some time, 2-3 weeks to set up everything, but you need to do a preliminary work, which is putting all the numbers in order, getting all the balance sheet audited, the profit and loss, and also the tax return. The last two tax return, the last two profit and loss, and the last two balance sheet. Once you have a data room built, then you can start doing this holding subsidiary and transferring all the shares to Latin America to UK, for example, or US, can be any first world economy. The only thing is, for example, in the case of Brazil, we transfer 99% of the shares, because if you transfer 100% of the full package, then you need to pay more tax, right? It's more taxable. So if you transfer only 99% to UK and you leave 1% in Brazil, it's not considered as a sale, right? It's not a sale, right? So we have some
interesting loophole, I guess.
Yeah, correct. It's a small trick, right? So you don't need to transfer 100% because it's going to be considered as a sale and you need to pay tax, right? A lot of taxes. So it's better to leave 1% in a country that is becoming subsidiary. So you can do this. And also, if you have the holding in UK or US, the investors are likely to invest, right? Because they are investing through a UK legal entity or US legal entity. That way you offering safety to the investor to put the fund through that holding company. Then you bring down the funds to Brazil. You pay to the seller, right? Or you inject capital for growth. And another thing very important to do this model, which I'm very keen to do it. Every week we analyze in Latin American deal, is the asset. The asset must be done by a top 10 accounting firm like Deloitte, KPMG, BDO, Ernst & Young, all the big firms. Because if you do the evaluation, the appraisals with a regular firm, then in the UK nobody knows that kind of firm, and they maybe think it's not real, right? It's not real numbers. So it's better to do it with KPMG, Deloitte, or any of these kind of firms.
Who pays that? Was the company pays that, or that comes out of the acquirer's pocket?
Yeah, no. The company target pay, right?
Okay,
the company target. Sometimes you can pay the whole process on success fee basis, right? So after you take over the company, you pay to Deloitte or KPMG. These firms are, of course, very expensive, right? So it's better to be very straightforward with them from the day one. And then you just do all the legal, accounting, due diligence. You do all the transitions of becoming a holding subsidiary. Actually, I copied from this firm, right? I copied from Deloitte, this holding subsidiary. But the thing is, they do with plus 100 million deals, and I'm doing with 5 million, 20 million companies, right? So, but they do with the bigger deals because they are very expensive, right? So their fee are more expensive to do it. But we can do it for 50,000 to 75,000. It can cost, right? To set up the holding with a bank account, with all the legals, all the due diligence. You're gonna spend 50K, 75K, but you can buy a $20 million company, right? Doing this methodology. And then after you do this setup, then you need to do a fundraising campaign, right? Bringing investors on board for investing in this international or multinational company now is becoming. And then the fundraising side also is important because you need to pay something to the seller.
Yeah, sometimes is it 10% down, 5% down, or something, right? The other part of it's the LBO.
So this one I really like it because I am a global deal maker. I like to travel, to do on-site, to do a diligence with my team, with a CPA, with a lawyer, with a technical person. Also, it's important to do a due diligence. And then it fits my acquisition methodology, right? So going out there, and I try Mexico. Mexico is a lot of hotel for sale, right? And it's like 100 million hotels, 50 million hotels all over Cancun and Tulum, all these places, but they don't know how to exit. So I start planning to do some takeovers out there with some partners and setting up the holding in Miami, because Miami is very relevant for Latin American markets. Miami, Florida is the bridge between Latin America and Miami. And Latin American is 21 countries, right? And then you set up the holding in Miami, everybody gets comfortable, and then you can do this kind of transaction, right, between Latin America and the US. So
let me ask you a question, because I asked my buddy from Peru about this. He said that, so if I was to give you, I already sent him the income statement, 2 to 3 years, and the balance sheet and the cash flow statement how much credibility, how much do you trust that? And he goes, none. It's like, okay, what's the next thing you do? I mean, what's the kind of next due diligence do you do? I mean, what is it on a Latin American country?
Yes, so the due diligence must to be done, of course, but a top tier firm like Deloitte, KPMG, and also it depends the industry that you're doing, right? Sometimes mining industry can be a bit suspicious. You know, some industries doesn't fit this criteria because it's difficult to do a due diligence on site. So it's better to do with asset heavy deals, no asset light deals. Asset heavy deals,
Okay.
asset heavy deal. Yeah. So something that you can verify easily, like a property, like a machinery, like equipment. So asset heavy deals only that works. Like at the factory I bought, it was a LED factory with 2 million euros equipment, with a lot of stock, with a lot of property, so easy to leverage. But if it's only services,
Software is like he just like backed away. He goes like, John,
yeah,
it's the IPs and the people, so we don't have any way to verify that. Yeah.
all right, a bunch of computers and a software. This is very difficult to leverage. But I say always but, because one client from London, Rebecca, she bought a £5 million cybersecurity company. But the thing is, there is no asset, but the asset was the contract. They have a contract with the government, with the army, right? So they have 10 years contract, and it's very easy to leverage this kind of contract, right? Because it's cash coming in all the
It's
time.
like
So
you put that contract down with was it the Royal Marines or Army or something?
Correct. That is the big credibility. So yeah, this kind of contract also can be used as an asset. The same with digital marketing, with software companies. If you have a big brand like a client, then this kind of contract, the receivables can be used as a collateral to bring funds. Right? You can use revenue lender, cash flow lenders, or invoice lenders, the alternative finance market, right? Yeah.
It's all right. I'm going to run that deal by you. I mean, it's kind of a little bit smaller, but
Yeah.
take a look at it because they've got some great clients. Microsoft's a client, Santander's a client. There's some big high profile customers.
Okay. Yeah, if you have any deal, we can discuss. If it's normally people, when they want to get started into the M&A space as a deal maker, I recommend to do one single acquisition between 500K to 5 million, right? Because some people want to do more complex acquisition like IPO, SPACs, or roll-ups, which take more time because you need to convince 5 people to roll up with you to merger and then to do an IPO. But it's better to prove the system, right? To have everything in place, close a deal, and then you have kind of a credibility, you will feel more confidence, and then you can do bigger deals. Doesn't matter if it's small, big in the beginning. You need just to close one deal to prove that you can do it. Then you can do global, or you can do bigger deals. So I recommend to people to if they want to start into the M&A space, if they want to become a business buyer, I recommend to become a qualified buyer, right? Because I'm seeing all the time people who is starting on this space and they don't have an acquisition criteria set up. They don't have an acquisition strategy, properly set up. Also, they don't know how to build a data room. They don't have a proof of funds, They don't know how to prepare for the negotiation. So for me, it's very important to become a qualified buyer so you don't get blacklisted into the broker network, right? As soon as the broker realize you are not a serious buyer, they are all interconnected, right? So if you are,
they don't have any time waste on you, I tell you.
Yeah, you're gonna be a time waster. They're gonna blacklist you, and then you can access to more deals, at least through brokers. You can find off-market deals, of course, using different lead generations that we use in our M&A deal making program. But so brokers are important out there. 20% of the deal are sold by a broker.
Yeah.
So
let me rewind a little bit. I mean, I'm going to go back to the Harvard law grad. So, like you got a law grad from Harvard, and like I didn't want to do this. I started doing it, and I hated it, or what is like.
This one is like it was like a business program, no a degree, right? So I went 2 years in a row to study negotiation because I realized it's a negotiation. It's called program on negotiation, right? I met a lot of CEOs and very important people. They go every year to study this kind of program because negotiation for M&A is very important, right? So I have a very nice negotiation preparation checklist. I will send you for free if you want. I got that from Harvard. So I realized that being a deal maker also is very important to have negotiation skills. This reason I was investigating and doing my research where to study negotiation, right, in a professional way. So I went to Boston, 2 years in a row to study this topic. I met the professor Deepa Malhotra, and Francesca Zino. So I make very good friends with her, and then I bought her book and I did the training, and it was amazing. I think I recommend to any deal maker to go there to Boston. They do 3 times per year this program, right? So you can enroll to any of them, and then you're gonna meet amazing people, right? Global CEOs. They fly over Boston to do this kind of training. And the professors are amazing, right? So Harvard professor, they have a
Do
great
they
credibility.
still teach that course, Never Split the Difference guy?
Yeah. So
Yeah.
this guy is this Never Split the Difference. There's a nice book, right, from this guy. He's from LA, right? So he's a great negotiator. I love this book. Yeah, so it's one of my favorite. Yeah.
So
They
how
don't
did you get started in your first acquisition and just say, how am I going to acquire a company? And
Yeah. So I bought the first company when I was 24 with
24.
when my M&A lawyer, right? My M&A lawyer bought it for me, kind of, right? So I was working in a law firm back in Argentina, in Buenos Aires, and then they were telling me that they are buying distressed companies, no money down. And in the beginning, I thought this is like a scam. How you can buy a business, no money down, a distressed company? That can be not possible. And then I start to watch them how they close deals on the negotiation table, right, with the sellers. Distressed companies mainly they were buying, but I don't recommend to anybody to buy a distressed company because I personally bought it, and then it's very stressful to restructure a company, right? It's very stressful to deal with the creditors, with the banks. Everybody is calling you to, hey, can you pay me? Can you pay me my invoice? Can you give me money? So it's very stressful. So this was, almost 200 employees, trucking company, transportation company in Argentina. It was a pretty big deal. I was very excited. Next day, I got the Mercedes-Benz from the CEO. I wanted to do everything at once. I wanted to be the CEO. I wanted to be the sales manager. I wanted to do branding, marketing, being the deal maker all at once. So after 6 months, 5 months, the company bankrupt. So I bankrupt with that
there you
company.
go. That's your first lesson. Berkshire Hathaway went bankrupt too. So
I'm not ashamed to say that because it was a nice experience. I felt very excited about the M&A war and buying deals, no money down. But this distressed company was crazy, the transportation company, and then you feel a bit sad when the company go bankrupt and all the jobs, people lose the job, and so it was very difficult time.
I don't recommend it either unless you love doing it. I mean, you're starting from a hole. I bought a distressed company. It was an e-commerce company, and after 3-4 months, people that didn't get their refunds that the guy didn't tell me were putting it onto that site where it's not high decking, but it's like the worst STO in the world. Hey, this guy didn't pay my refund. Like, wait a minute, I didn't negotiate that. It sucked. It went through
This was my first lesson. So don't buy any distressed company. I know some people out there is saying buy your distressed company for $1 consideration, but this is a very bad advice for somebody who is starting, like me when I was 24 years old, because you need to be an expert at restructuring companies, right? You need to know how to drive sales, how to increase the profitability of the company, how to have an exit strategy, who can be the potential buyer after I purchase the business, how can I grow by M&A? You need to be more knowledgeable about this topic to start doing distressed company. But of course, you want to feel very tempted. If somebody tell you, I'm going to give you my $10 million company for $1 consideration, but you have $10 million asset and 11 million debt. So that company worth is -1, right? So your dollar that you paying is more than what it's worth. And then you're going to have a lot of issues with the dealing with the creditors.
I know a guy that's pretty good at it now, but because he's got a platform company and he just looks at it and goes, I could just, plug it into my platform company and it makes sense, but not now.
Then I realized, okay, I was in Argentina, I was making a lot of millions of pesos, so the currency is very is very weak right now. So I would say, what if I do the same, but with a solid currency like British pounds, for example? So then I decided to move to the UK, when I was 29. So I decided to move there. I got my Italian passport. I have the two nationalities. So with that, I was entitled to live in the UK. I set up my company there. I bought a football club in Spain, the LED factory in Brazil. So I started doing deals in euros, in another currencies, and it was very exciting journey, right? So I rented my office in the Gherkin in London. I was getting a bit popular. Everybody want to sell to me because, of course, if you have a nice office, if you have a couple of deals in your pipeline, if you close some deals, then people will start reach out. Oh, this guy, he's buying businesses. So I was in the newspaper in Spain because also Spanish is my first language. So when I bought the football club in Spain, I became a bit popular. Of course, no Barcelona, no big brand, but it was a third division football club. And then I was, I got in the interview with the television, radio, and then I started getting famous. And a lot of Spanish, business owners start reaching me out to sell their companies. And then I started analyzing deals there. But of course, Spain is not the same of UK, right? It's the LBO strategies are harder. So you always need to set up the holding in the UK, right? Always playing safe from a first world economy, right? And then you can absorb companies from third world countries or second world countries, right? So like Latin America, for example. So, but right now I recommend people, after I moved to the UK, so to continue with the story, I've been living there 5 years and a half in London. And then I decided that the London is, it's a bit, the weather, the British weather is not what I wanted. So I decided to,
Really?
yeah, no, I decided to do 3 months, 3 months in Georgia, the country Georgia. I don't know if you know that country, beside
Yeah.
Turkey.
Oh, yeah. Not Georgia, United States, but Georgia and UK. I lived in Turkey for a year. My dad was stationed there, and I lived in Germany for 3 years.
Nice. So I moved with my wife to Georgia. We bought our house there, and we're doing some business from there. And then we spend the summertime, only 3 months there, 3 months in Europe, 3 months in Latin America, and 3 months in the US. So I'm following the sun, and enjoying a better weather. And I realized all this deal making lifestyle, I can do it from the computer. So yeah, it's very helpful to be
So
able to
how many deals have you been involved in at acquiring?
Yeah, 45 approximately.
35?
45 with my
45
clients.
deals. That's amazing.
With my clients. Myself 4 only. Myself.
Yeah.
That's myself 4, but with my client 45. Approximately between 20 and 30% of my clients, they close the deals. When they hire me to help them to become a qualified buyer and helping them to close their first deal, these kind of clients, we have between 20 and 30% successful rate. So it's pretty decent on my side. And then I have clients who they hire me to help them to grow by M&A, right? So this is companies making at least 10 million sales per year. They want to grow by M&A, do a couple of single acquisitions, and then we do an SPAC or IPO, in Sweden mainly. So
I have to tell you that many of the people that reach out to me are first time M&A, and it's their first acquisition that's toughest. What do you look for in a client to help them get over that first one?
Yeah, so first of all, it's not all about the money. Of course, I charge money to work with myself, but also I get equity, right? Because I believe I'm going to get involved and I'm going to make sure my clients buy the right deal. I know the wrong ones. So I get 5% equity normally, between 5 and 10% equity on the first deal that I close with my client. And also I charge a fee for 12 months, right? So service. But what I'm looking for is somebody who can commit 4 hours at least per week, who have a business experience, who have a good credit score, who also want to get involved in an industry that they know, right? Mainly. And also somebody willing to learn new things, right? More curious person, because a lot of people reach out to me with all the answers and they came to me with a deal on the table. A lot of people came to me, 50%, say, Sebastian, I got this $30 million deal. I want you to help me to close. I want to enroll your program and all this kind of approach. And I can tell these kind of people, they are not going to close it, because when I start asking 3 or 4 questions, like, do you have proof of funds? Do you have 2 investors line up? Because Lenders will give you up to 90% of the asking price. That is not the problem, right? We have lenders network. I have very good lenders that provide me up to 90%. But the lenders normally will ask you, okay, are you willing to put a personal guarantee? Normally they will say no. Are you willing to put some skin on the game, 100K, 200K? Well, I don't have it, right? So you will need at least 1 or 2 investors line up to put 200K, 300K, 100K as a skin in the game. The lenders can give you the money. And then you need to have a strategy. Why are you buying this business? What do you want to do? How you want to increase the sale? How you want to pay the debt repayment plan, right? How you want to pay the lenders? How you want to share the dividends with the investor, right? So you need to have a big idea before you do the deal hunting. This reason I have 7 steps until you buy your deal. So deal hunting is the last part. Deal hunting, you cannot start hunting for deals until you are ready, you are prepared for the opportunity. This reason for me is very important to become a qualified buyer. So I prepare people to become a qualified buyer. I provide to them a $5 million commitment letter from my trusted lender. So if I give you a commitment letter of $5 million, you can pass the question when somebody asks you, can you show me proof of funds? You have something. Instead of you showing your bank statement, I can provide you with a commitment letter from a lender who had the license and everything in US, UK. So I help people to become a qualified buyer. This is mainly my
Do you
job.
think that's you spend the most time on is like prepping these?
I don't want to spend much time on this. I just did a promotion on December, and 61 people applied. Right. I try to keep it boutique, 50 people per year only, because I get to know them, personally. Sometimes we meet personally, because at the end of the day, they're gonna be my partners. I'm gonna get 5% equity. They're gonna get 95. So it's more hand-on guidance. I don't provide any online training, any info products, any challenge. I don't do any of these marketing tactics. What I do is more hand-on guidance. I take 50 people and I fully spend time with them. We have weekly calls, one-on-one. I provide you with the commitment letter, with all the documents that you need to become a qualified buyer. And then together we analyze the deal and we fly over to do the site viewing. We do different things like acting as a real partner, because I realize that way the probability to you to close a deal is higher, right? A lot of people reach out to me and they say, I bought this online course, X course, and then they're a bit disappointed because they don't know how to start, how to approach the seller, how to build an investor network, how to develop the lenders network, right? How to show credibility in front of the seller or the broker or the investment banker or the family office or the private equity firm. So the information is great. You can watch a YouTube video, you can buy an online course, but then you're gonna feel lonely, because being a deal maker is a lonely journey, right? If you don't know where to start. So I realized I want to focus on providing hand-on guidance during 12 months, because I don't sell magic, right? I think it's very important to have a time frame of 12 months. Some people can close a deal in 3 months if they're very hardworking. Some people can do in 5 months, 6 months, 7 months, 9 months. It depends, right? So I believe in long-term relationships. This reason I want to do it in a 12-month program, like the service I'm providing in the M&A training.
Who's your best student? I mean, how many deals have they done? You always see somebody break out.
Yeah, so I have one from Canada, Damian. Damian is from Canada. He bought a commercial lending company for 3.5 million. And now he's doing e-commerce acquisition. He's buying the second acquisition. So I get very excited when one of my clients is making a good money per year, and they buying the second acquisition, right? And we still keep the relationship. We started together 3 years ago. I flew to Canada, to Vancouver, to meet him. We spent 1 week together developing a acquisition strategy, meeting a few private equity investors in Vancouver, and then it's nice when you build a relationship with people. I'm a people person. I'm very reachable, so I like to spend time with them. And I think this kind of methodology that I'm applying to teach people, if you want to call it, or to partner with people about how to buy their first or second company, is working. It's working very well. So I'm very happy with this.
Yeah. Did that 5%, is that just equity, or you're getting profit first or dividends or something?
No, I get equity, 5% equity. So I became a shareholder, silent one, silent shareholder. I just get my portion of the dividends every quarter or every 6 months, right? So I get some
Yeah.
equity in different companies. So that
Yeah,
way
I know a
it
guy that
allow
does,
me. Yeah.
I know a guy that does that, and he'll ask for 5% of the gross profits,
Okay.
at the
Okay.
top, cash flow out. Say, hey, it's kind
That's
of
good
a
idea.
Shark Tank guy where he goes, hey, you're going to pay me back until my original investment's back, and then I still own 1% or something. Yeah.
Yeah, it's a good idea also. Yeah, maybe I will consider it. Yeah. I was thinking which is the best way and the fair way to work with people, right? I want to be fair. I want to, provide a good value, right? Because I'm here for the long run, right? If you do something like very abusive, if you want to take 50%, I know people out there that they take 50% of the company just to teach you, how to buy companies or stuff. That is too aggressive. I recommend to do it very, 5% for me is enough, right? And then, but if I have 5% of 50 people, then it's gonna be a good portfolio of companies for myself, right? You know what I mean?
Yeah.
So you can get a small piece of the cake, and you can help people to become first-time business owners. And also, this year I'm taking my bigger clients, right, with plus 10 million revenue. So we trying to plan 2 or 3 acquisitions and then do an IPO in Sweden, right, for example, which is the fastest and it's a very good stock exchange out there, and then it's not expensive. So yes, I'm planning to do bigger deals this year. I'm very excited. I think the M&A last year was big, so many transactions, and this year, after all this pandemic and COVID, a lot of companies, they are recovering, and then now you can tell which company is good, which company survive all this pandemic, and then you can pick, the best deals, right? That's,
Yeah.
I always recommend to buy asset heavy deals just because it's easier to leverage, right? Because you have the equipment, the real estate, and the machinery to use it as a collateral. Of course, you can try asset light deals like a digital marketing companies, but if you want to close a deal in 3 months, 6 months, or as fast as possible, I recommend to do it with asset heavy deals, and mainly manufacturing, healthcare, warehousing, trucking companies, something that you can use as a collateral. And also, for me, deal flow is not a big deal. It's not the Some people think increasing your deal flow, increasing your pipeline is very important. For me, it's not important. And some people even is paying 3,000 per month, 4,000 to deal finders, to deal sourcers, finder fees, right? To some companies. I know this industry very well, right? I don't recommend to do that because deals are out there, right? Opportunities
Yeah.
are out there
They're
all the time,
everywhere. Yeah.
everywhere. But if you are not qualified buyer, there is my point. If you are not qualified buyer, then you want to start watching opportunities pass by like a buses, and then you cannot do anything. You're going to spend 2-3 years to close a deal, maybe if you're lucky, if you find a highly motivated seller, right? But if you know what you're doing, if you have a proper acquisition criteria, if you have a proper exit strategy, if you know what you're doing, if you have proof of funds, if you have somebody who can take you there, right, it's easier. It's easier to close a deal. So
Yeah.
for
How
that
do you
reason,
judge as somebody that says, hey, I want to buy this manufacturing plant, they make X widgets, and like, how do you say, well, you're a doctor, you came from some other medical field,
correct,
right? Like, you don't know
correct.
anything about B2C products.
Yeah, when they have zero industry knowledge, what I recommend is to hire or to put on the board somebody with 10 plus years of experience, right, in the industry that you're targeting, right? If you don't have somebody on your board, for me, when I was 24 years old, I didn't have any board, just me and the lawyer who was my boss. So I
Yeah.
don't believe that you need to build a solid board to buy a deal. I think anybody can do it if they have all the pieces in place. But if you're a doctor and you want to buy a trucking deal, for example, you need somebody who understands at least the industry, 5 years experience, right? So maybe you can hire an external consultant and pay a success fee after deal completion, or you can give equity, small equity after also the deal completion. Different
Yeah.
ways you can pay equity or consulting fee. So you can bring somebody else as external
Yeah,
consultant.
this is like the Warren Buffett, Charlie. They don't know anything
Yeah,
about See's candy. I mean,
correct.
they like eating it, but they don't know anything about manufacturing and building it. So yeah,
Yeah, they
finding
surround
the right
themselves with the
people.
right people. With the right people, yeah. As Richard Branson said, with the right people, everything is possible, right? He's my
Yeah, and
favorite coach.
I've listened to, I've got Andrew Wilkinson from Tiny Capital on my list
Okay.
in my rotation, and he's just like, hey, my number one job is to hire and fire CEOs.
Yeah, yeah, because you can find somebody also in the UK. It's called non-executive directors, right? You have an association with people who is retired already, but they would like to participate on deals still and get paid a quarterly fee or an year fee for annual general meetings, right? So you can hire people who've been managing plus 1,000 employees, right, and put them on your board and doing a very, very nice, building your nice pitch deck with you, right, for a very cheap price. Non-executive director. The same in the US and in Australia or Canada. You can bring on board this kind of people who is retired already and they would like to get into this space, M&A, or they believe in you, or they really know the industry that you're targeting.
Well, they're
Also,
just like keep busy,
yeah.
they don't like
Another thing, John, I recommend is that expert 5+ years of experience in the industry that you're targeting, and also you can buy a market report about the industry, right? For $100 on statista.com, for example, any of these providers, to have a better understanding of the industry that you are entering, right? So if you are in the negotiation table and if you know the top 10 players in the trucking industry, how much is this industry performing, and you know the main numbers and the main players, then you will sound more knowledgeable, and that is going to give you more credibility to negotiate. It's like, oh, okay, he's a doctor, but he really understands the markets. He really know the top 10 players. He understands the main numbers of the trucking industry. He got somebody with 5+ years of experience. So must make sense, the acquisition strategy, right? And also the criteria that you're setting, right? So
yeah. So what do you have any students that are doing multiple roll-ups? I know you said that a guy that lending company and then start buying e-commerce. Do they have kind of an exit plan like 3 to 5 years, or
yes, some of them
or hold? Yeah.
Yes, sometimes we our system, the system that I'm applying, the M&A strategy that I have is buying a business, delegate the management, and get dividends. It's very simple. So you are not buying a job like most of the deal makers are doing. They buy a job, they want to be the CEO, they want to be all at once.
Yeah.
So when you delegate the management with somebody who's been running businesses in the same size, you can. They can develop also a growth plan for you, right? The CEO can develop a growth plan, and then you just always working with developing the network with family office, private equity firm to have an exit plan, to be acquired by them, or to buy 1 or 2 single acquisitions or synergistic acquisition to then do an IPO or doing a bigger exit. So yeah, exit plan. I help them to set up the exit plan. But the most important thing is before you buying a business, you must have the strategy. No, after. Some people just buy a deal. Most of the people, they buy a deal and then they don't know how.
And they're happy, man. Grow. They bought their lifestyle business and they're happy.
I know. Yeah. So it deal is a different story, right? Each people is a different story. So I really enjoy the diversity of this M&A world, right? Because you have so many industries, so many personalities, and also so many cities to explore.
Yeah.
And
so what are you seeing the most of? I mean, I like the personality that comes to you. Like 50 people come to you, he goes like, hey, they're all motivated, but I've got to, this is like the big question is like how to pick the superstars, because you need the superstar in the acquisition, you need it in operations, and you need it in delivery, and like picking that person that's going to be, well, I if I'm going to put any time or money behind this guy, I know he's going to do it. Or girl.
I think for me it's very important that being humble and coachable, right? For me, it doesn't matter the money that you have. Some people came with me with 200K. I say, Sebastian, I got the skin in the game. I got 200K. I know what I want. I want to buy, for example, logistic companies in Florida. Let's do it. Let's work together. Find me a deal. Let's close it together. But then these kind of people, they know all the answers. I decline them, even if they want to pay me, because they're gonna waste my time and they don't want to listen, right? They came with me with deals and money, but then they don't know the process, the entire process of M&A. You need to understand what you're doing, then setting up a proper acquisition criteria, and then take action, right? Not the opposite around, taking action and then thinking about a strategy and then thinking what to do. So it's not the money. It's a lot of people with money, with 100K, $500,000 sitting in savings, but I don't taking them on board if they are not coachable. So for me, it's important being coachable, and
Yeah.
also
Is there a
humble.
story behind that where you started working with somebody, the guy was not humble and not coachable, and it just blew up
Yeah,
everything?
yeah. I've been doing coaching for a while, 4 years and a half, and I met different personalities, right? So I can tell how they word the conversation. I can tell if they are gonna be coachable or not, and if they are good listener. Because on negotiation and also in the M&A space, you need to listen. Why you selling? You should ask and then listen. Right? Why you selling the company? How you did you start this company? And you need to be good at listening. Right? And the people who don't listen, I don't try. I try to don't take them on board, right? Because it's a very
How do you
it's
know
not
they're
good for.
not listening? Are you on the call when
Yeah,
they're asking questions? Like,
when I interview them, I realize they are not the right fit, and I say, listen, it's fine. You can try buying uh, an online course and do it yourself. You don't need me. I should say that, very politely in a most polite way, because I don't feel comfortable with somebody that I want to explain. You need to do this, and the week after they came with me with 3 deals they found on visitforsale.com, any of those websites. And I said, listen, you are not ready for this, right? You need to prepare yourself. 2 months preparation, 45 days preparation, knowing the main terms, the main question to ask to the seller, to the broker, getting proof of funds. You need to have a lot of things in place, setting up the foundations, then go out and do the deal hunting. So if they came to me with deals from day one and they are a bit arrogant or something, and they say, I've been closing deals my whole life, I know how to close it.
45.
You
Yeah.
know,
Yeah.
it's 45. Now I became the M&A advisor of microacquire.com.
I
I
know.
don't know
I
if you
saw
know
that.
them. Yeah,
Congratulations.
yeah, 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 yeah.
I know Andrew. I'm going to get him on the,
Andrew.
yeah.
Yeah, get him on the board. So I get him on the interview, and then we are a 110 million company now. Valuation. So
Valuation.
it's
Yeah.
great, and I'm advising a lot of startups owners there. I have like almost 7 clients. They reach out to me. They want to sell their company. They list it on MicroAcquire. So I also advising people to how to exit their company. Right. So most
Yeah.
important.
I actually know another guy is doing exactly what you're doing.
Oh,
Yeah.
okay. Okay. Yes, it's a lot of people teaching this. I got into the M&A coaching space as people start reaching out to me in my office in London, right? I didn't want to. Also, English is not my first language, and I didn't want to be like a public figure, right? But then I realized, how can I do this and get in equity, right? It's not all about the money, also the equity, like a deal maker, because I am a deal maker. I want to get involved, I want to get equity, I want to help people to also achieve their first or second acquisition, but I want to get equity, right? So I found this way very fair for everybody. It's a win-win situation. So yeah, it's
Yeah. Your English is fine. I guess like after
fine.
like
Yeah,
2 3 minutes, I mean, I don't have any
yeah,
problem
yeah,
understanding. Yeah.
yeah. No, it's fine. Yeah,
Yeah.
doesn't matter. It's no excuses. English, no excuse. No money, no excuse. People just put excuses for everything. Right? You just need to take action. And I don't mind competing with anybody. And you just need to get out there, exposing yourself more in the beginning. If nobody know you, need to keep exposing yourself. Getting out there, getting in the different interviews, getting in podcasts, getting and the sellers must to get to know you, because if you want to buy deals, doing the inbound marketing strategy that like they contacting you, you need to keep posting and promoting and putting content out there, attracting the right business seller, right? The motivated
Yeah.
one better.
Yeah.
Yeah.
I got to ask you a question about
Yeah, sure.
asking questions of the seller. I mean, what kind of questions do you ask, and like,
Yeah,
what are you listening for to make sure he's, actually does want to sell versus,
yeah, correct.
just testing.
Yeah, so the first question is a very nice one. So you say, what are you planning to do after we close a deal together, right? I am very straightforward. I want to close a deal. So what are your plans after we close a deal together? After you sell, after you exit, what is your plan? So if they don't have a plan, says
And if they don't have a plan,
they don't have
they're
a
just
plan.
wasting your time.
They wasting your time. And the second question, or the first one, is the understanding their why. Why they're selling? Because they put excuses and maybe, everybody want to retire, right? But this is the easiest answer. But then
Yeah,
you have to
so
understand the
there's
why,
always a number of questions like,
Yeah.
and I got to tell you, when I sold my business,
Yeah.
I wanted to sell my business. A lot of people didn't ask me like why I wanted to sell it. And the truth was, one of the big truths was, well, a competitor came in owned by United Healthcare, and they owned the company that I was competing against with, and I couldn't compete them on like to acquire leads anymore. So yeah, that's one reason why I want to get out.
All right, yeah. So understanding their why is very relevant. So asking always why they're selling and just listening, right? And meeting the key people inside the company when you do a site visit and trying to listen what they think about. Sometimes it's a confidential thing. They cannot introduce you as the buyer because they get panic. All the employees get panic about losing their job.
Yeah, so
But
that's a good
yeah,
sign, because if they're introducing your employees, they've already
yeah,
told them they're selling. They have to,
yeah,
because those
correct.
people will panic.
Correct. If they tell it's a confidential thing, nobody must to know. Maybe they are not fully ready for an exit, right? So,
Right.
and then what else? Yeah, so some indicators that they are time wasters. Some business owners, they just want to know how much their business worth, right? Just they want to know, and they want to make you waste time. You do the site visit, you make them for a lunch, for dinner, you spend some time on due diligence, on advice or anything, and they say, well, I'm not ready, I want to stay on board, and they decline your letter of intent, or they ask you for more money. Then you realize they are not really motivated. So I recommend, when you start doing deals, don't get emotionally attached with any deal. This reason you need to have in your pipeline 5-10 deals, and send 5-10 letter of intent and wait until it's signed back, right? So I don't get emotionally attached with any deal, because as my own experience, then you're losing, right? If you get emotionally attached with deals, it's like a with person. You need to be,
Yeah, it's
wait.
like, hey, she's gonna call me back. I'm gonna keep calling her until she calls me back. Yeah, don't
Correct.
get
Yeah.
attached.
So these two questions, right? You need to realize what they're gonna do with their money after you purchase the business, and understanding their why. So if they don't have a plan, what they're gonna do next is, because some people don't have a plan, because well, I'm gonna get this 10 million and then I'm gonna travel around the world. I wanna buy an island. I wanna do this. This can be, at least they must have an answer, right?
Yeah.
But yeah,
How much
story
time do you
behind.
spend on valuation? With the reason I ask is, like, as an asset heavy business, it's gonna have a set type of valuation type of business, right?
Yeah. The business that we are analyzing must to have the appraisal done, must to have the audited balance sheet and profit and loss, must to be everything, the tax return also, everything. They must to build a data room before they sell. The problem is, most of the brokers, they are behind commission. They don't know how to sell a company. They want a commission only. So they don't know how to prepare a proper data room, with the marketing materials, with the tax return, with the balance sheets, with all the profit and loss. If the business is not ready for an exit, then you need to understand that you will spend more time. But if everything is properly done in a virtual data room, then you can do it quicker, right? If it's the appraisal done from real estate, everything is done, then it's going to be quicker. So I try to check out, the memorandum information, checking out that everything is properly done, and then I spend more time. But if it's a mess, right, like most of the deals, they are not organized, then I try to decline, right? I want a deals where they are fully ready for an exit, and they're selling for a 4 times multiple EBITDA maximum, right? Because my lenders, they don't like expensive deals, and also the investors, they don't like expensive deals. Investing in something that is overvalued.
Yeah, well,
So,
okay, just curious, what is the interest rate for an international company? Like,
yes, for loans, you
senior
mean
debt? Yeah.
Yeah, so it's between 6% and 11%, the most expensive one, right? It depends the lending facility that you applying. We use in the alternative finance market, like asset-based lenders, cash flow lenders, revenue lenders, invoice lenders. So these kind of lenders, they have from 6% to 11% maximum. Right? So the average 7, let's say 7. So you
Yeah.
have a 7% interest rate. The
What's
lenders I'm working with, right? So.
Is there any industries you avoid, like oil and gas or mining? You did mention mining earlier.
Yeah, so the ones that I avoid personally are the CBD marijuana related,
You mean
the
CBD, like
oil and marijuana.
oh
Marijuana.
yeah. I know, like, hey, you can't move that money around the United States federally. So
All what is drugs and weapons and casinos, I don't personally do because for ethic reason. So I don't want to get involved with in any of these deals just for personal reason. It's not profitable. Maybe some people's making a lot of money on this, but I don't want to profit on this kind of industry because my values, personal values. For example, this is I'm not taking guns or weapons factories or casinos or gambling stuff.
Yeah.
I don't do this, but yeah, I'm not saying it's no good deals. You can find very good opportunities out there, but it depends.
Yeah,
Every
it's your
person have
choice. I
their
mean,
values. Your
it's
choice,
like a
yeah.
student comes to you, one of your 50,
Yeah.
and they say, "I want to work on this casino." You go, I you gonna find somebody else, or
Yeah, I pass you to another M&A advisor that I know, no problem, right? We
yeah,
can, and then I don't put that on my track record. If I help it in some way, I don't put that on my track record. I don't want to be recognized as the guy who make money selling, casinos or weapons just for my, my credibility, right? So,
yeah. No,
okay,
I mean, it's up to you. I don't
yeah,
gamble either on that case. I think the risk is way too high. The numbers
yeah.
on it, and it's just
Some
a
some industries that I try to don't do is for example, software as a service, test as a service, all what is
you don't do
digital.
those software as a service.
I do advisory how you can sell this company, right? I do the sell side advisory on these companies or micro acquire, right? But then for a buyer perspective, if it's not a synergetic acquisition, if you don't got the money to pay 10 times multiple, 15 times, EBITDA. So then it's difficult for a buyer and for people that we know that they are doing LBO strategies, right? With IT companies, because you don't have much to use as a leverage, right? You don't have enough collaterals, enough assets, except they have solid contract with big brands, right? But
Yeah,
then
you gotta have consistent earnings, like 3 to 5 plus years on that, because they
and
go,
another
hey,
thing
they go
is
3 years, like, whoa, how
yeah,
do I get my money back if you go?
I know. Another thing is very important is I don't know taking companies who are new, right? New companies, no. If you want to buy a 2 years company, it's not enough track record, right? For the lenders, for the investor, is so most of the IT companies, e-commerce companies, they are 2 years old, right? There's normally 25 years old guys who want to make their first million selling their e-commerce, and I understand that is fine, but then you don't have enough financials to do a cash flow projections. You don't have the lenders don't feel comfortable sometimes. Now you have a lot of e-commerce lending facilities, right? Is becoming more popular because of course most of the companies became an e-commerce, so they must to
Yeah, it's
adapt.
crazy numbers with Thrasio and those guys. Yeah,
Yeah. But before so 1 year ago was good idea to buy e-commerce up to $500,000 because you have PayPal loans. PayPal loans. So
yeah, cash flow. Yeah, right on
yeah,
cash. Yeah,
you can apply for a PayPal loan through PayPal up to 500,000, and you can use the PayPal from the company target, right, account, and then you can apply for funding solution and pay that way, so you don't use the money, right? You can leverage with PayPal, but now they changed the regulation. I think
yeah,
they lower down to 100K only, so too small. So
yeah.
some
Well,
people
what
may
kind of
want to
deals are you working at right now on your recent
tracking, yeah,
customer?
tracking a road construction company in India. We have a $42 million road construction company. The buyers are from Washington D.C., right? So we setting up the company, and then
Let me ask you about that.
yeah.
So having the right people in the place, how have you done business in India before?
No, no,
No.
no. This reason we need to have a top tier firms like Deloitte, working with these big firms that they can do the
From
evaluation.
India.
Yeah, from India, because they are a global firm. They have branches everywhere. So I working with Deloitte or KPMG only, and sometimes with BDO. So we have these kind of companies, and we force the seller to work with them. If not, we are not interested. We cannot get evaluation from a regular firm
Yeah,
because
that
it's not
doesn't
it's not
sound,
valid.
I mean, it doesn't
It's not
matter what
valid.
country it was. If you didn't have any knowledge of the country or somebody
Right.
feet on the ground, like,
Correct.
yeah,
No. I need to go to India maybe in March, so I'm going with my team, my lawyers. So we're going there to do the site visit and reviewing everything, meet the key person. We've been chatting on Zoom all the time, but of course it's better to meet personally to do that everything is for real, right? And then we start the paperwork, right? So this kind of deals, global deals, Africa, India, Middle East, all these countries, is better when you have this kind of firms behind, right? So they are recognized in the UK or US for the investor side and also for the lenders, right? The lenders not
Yeah.
gonna lend you if you have a $1 million property in India and it's not the valuation and the appraisal is not done by Deloitte, then maybe that house worth 100K only, right? You need somebody who maybe, I'm not saying always is some cheating people, but you need to working with the world-class firms on these international deals, right?
Yeah. And what do you do at the Deloitte? You have your contact in the UK and say, hey, do you have somebody in India?
Yeah, correct. Yeah, so you can call the head M&A of Deloitte, for example, and say, hey, can you connect me with your partner in India? Do you know the M&A head office M&A? The
Yeah.
head of M&A. So they contact you with the partner, and then you start chatting, and then they say, well, yes, if they want to become a client, they need to pay X amount of money, or we can do a success
Yeah.
fee deal because we know you, Sebastian. Sometimes they don't charge me at front because they know my methodology of the LBO. So sometimes we can avoid any contingency fees or upfront fees, which is good,
Upfront
right?
fees. Yeah. I was just
Yeah,
curious, like, how do Deloitte's going to say, well, I got to pay my people. Well, so
I
when,
know. I know.
here's
Yeah,
the bill, due in 30 days.
yeah, they have they charge you by hour, right? $300, $700. It depends the professional tax planner, wealth, planner, wealth management expert. You have different professionals, the legal due diligence, technical one, the accounting one. So they will charge you by hour. So if they know you like they do it with me, sometimes I pay success fee after we close a deal successfully. We pay whatever invoice they start invoicing, in milestones, after we
Yeah.
close the deal,
And
but
that's
not
usually,
before.
so if a deal takes 12 months, they're willing to wait that long on the invoice?
No. The
No.
thing is, you must have again the data room organized, right? If it's a mess deal, I don't take it because I know I'm gonna waste their time. I'm gonna, it's gonna be bad for my reputation if I send a bad deal to Deloitte, for example, right? Must
Yeah,
be
don't send me
organized.
bad stuff.
Yeah, no
Take
bad
your
stuff.
phone call. Yeah.
Something that is ready to audit and can take you a couple of weeks, a couple of maximum 2 months to organize everything and then start applying for funding solution, right? So
Yeah. Did you take your attorneys with you on each deal to deal?
yeah,
Like the
no,
guy in India, he's got his own attorneys, or do you bring yours to cross?
yeah. So we have a bilingual attorneys, right? So we can each time if it's in Brazil, we have somebody who speak Portuguese, for understanding what the lawyer is telling me. See, if it's in India, somebody who speak their language, right, and also English, so I fully understand what is going on, right? Of course, in India, everything is in English, so it's not a problem, right? But we always bring a lawyer because the lawyers from both sides must be connected.
Yeah.
The legal team from US, for example, with the legal team in India must be interconnected, right? And sharing the
Yeah.
same folder, and everybody must be in the same page, right? So for
Yeah.
avoid any misunderstanding. So yeah,
Sebastian, I gotta,
yeah,
like an hour's already gone
yeah.
by.
I need to go. I need to go.
Yeah, I thank you so much, man. So
You're
everybody,
welcome.
this is Sebastian Amieva, investor, mentor, M&A, top M&A entrepreneur. I want to thank you so much for your time.
Thank you very much, John. Yeah. Let's publish this. I'm very excited, and thank you very much. And let's keep in touch. If you have any doubt about the M&A process, or if you have any personal questions, just send me a direct message.
Thank you
Thank you
so
very much.
much.
You're welcome.
I really appreciate that. Okay, cheers.
Bye. Bye.
Bye.